Hello guys, I'm Gökhan and welcome to Late Night Stocks. Today's topic is an American luxury store department chain, Nordstrom. The company announced its Q3 earnings this week and after that the stock price crashed. The company lost 29% of its market cap just in a day. Now its market cap is about to Q3 earnings revenue. Nordstrom announced $3.6 billion revenue in this quarter and its market cap is also the same number. Is it a no-brainer pick? The stock price seems very cheap, isn't it? In this video I'm gonna evaluate the Q3 earnings. After that, gonna compare the stock price with pre-pandemic levels like 2019. And finally we are gonna look at the macroeconomic trends to predict the stock price direction. I would like to emphasize that we don't get money for these videos. Before we start, please thumbs up to increase the visibility of this video and don't forget to subscribe to our channel for the latest news about the stock market. In the upcoming slides, we're gonna see a lot of times basis points or BPS and I would like to explain shortly. 1 basis point is equal to 100 of 1%. According to this definition, 100 basis point equals to 1%. Let's start with the good news. Nordstrom increased 8% in store sales in comparison to Q3 2019 in southern regions, and suburban stores outperformed the urban stores in this quarter. Actually, from the revenue point of view, there is no significant difference between urban or suburban sales. Q3 results in short, the company increased 1% of its net sales in comparison to the same period in 2019. The gross profit was also 80 bps higher. As you remember, it corresponds to 0.8%. On the other hand, selling, general and administrative expenses were 260 bps higher. Earnings before interest and taxes were 180% down. In other words, the company earned 1.8% less. By the way, the revenues includes a positive impact from anniversary sale timing shift with approximately 1 week shifting from Q2 to Q3 as compared to 2019. How about the mission of the management? The company wants to reinvest in business to grow faster and want to reduce the debt of company, and after that they want to return cash to shareholders. Returning cash to shareholders means paying dividends actually, and they plan to pay dividends next year. We should look at the Q3 earnings call transcript to get more information about the company. The company needs to grow its market share and deliver great profitability. Of course, the company has some internal and external problems, such as they have to improve Nordstrom rack performance and its profitability, and the external problems or macroeconomic problems such as optimizing their supply chain and inventory flow. Now you see a Nordstrom rack department store. This business is based on off-price sales of luxury brands. In last quarter, Nordstrom Rack has been challenged by the low inventory levels in premium brands in key categories such as women's apparel and shoes. So the problem is the demand is there but they can't deliver that products. Given that we expect macro-related supply chain disruptions to continue into next year, we are strategically evaluating our assortment and increasing our use of pack and hold inventory by a factor of 2 times to 3 times. Their strategy is they will increase the inventories independent of sales. In that situation, when demand explodes, they can deliver more products. As you know, this stock is typical reopening stock. When people start to go out, they will need more clothes and luxury products. The Nordstrom banner sales returned to 2019 levels in the third quarter. As we saw, Nordstrom comparable store sales grew 8% over the third quarter of 2019. In this quarter, digital sales increased 20% over the third quarter of 2019 and represented 40% of its business in this quarter. I already compared Q3 numbers this year over 2019, but it's good to remember. Net sales decreased 1% in the quarter compared to the same period in fiscal 2019. Anniversary sale boosted this quarter with 200 basis points. In other words, 2%. But Nordstrom Rack sales declined 8% as inventory procurement and flow challenges negatively impacted performance. When we come back to stock price, the company emphasized always the levels of 2019. But how about the stock price? In September 2019, the stock price was about $30 level. and the stock price was yesterday about $22. The revenues are similar in the same period in 2019, but why the stock price is down about 30%? By the way, there is an interesting correlation between the stock price and 10 years treasury yield. Of course, the latest sell-off has changed this parallel behavior. Guys, I would like to remind you that please give a like and don't forget to subscribe to our channel. By the way, subscribers who turned all notifications for our channel is very low and about 12%, and typical on YouTube 10 to 30%. I promise we gonna not spam you. If we look at again the Q3 earnings call, the company didn't give 2022 guidance in this quarter. They are still struggling to catch 2019 levels. One of their main goals in the short term is to reach 6% EBIT margin. As you see, the revenues until 2020 were consistent but not growing. During the pandemic they made a loss, but this won't be permanent. When we analyze the income statement and balance sheet, the company made $13.4 billion in trailing 12 months, and the gross profit was $3.14 billion. This is almost 25% of its revenue. Cash position and debt ratio are very important for this kind of companies. They had $487 million cash and 4.71 billion debt. As you see, the debt is huge, but the company also tries to reduce it. They had also $724 million leveraged free cash flow. I think as investors we should focus on 3 points. First, revenues, second, debt, and third, dividend payments. In November 2019, the company had $2.6 billion debt, and in the same period this year, they had $2.8 billion long-term debt. As you see, the company had $200 million more debt in comparison to 2019. When we evaluate these numbers, the company has similar revenues like 2019, more debt, and don't pay dividends yet. According to this calculation, the stock price should be lower than 2019 levels, but how much? I'm gonna explain it a bit later. If you watch this video, you are probably a retail investor, and you should be aware of the major stakeholders. As a retail investor, you can buy float shares, and 85% of float shares held by institutions. So if you have bought or will buy some shares, you will be in that 15%. But is it good time to buy now? To figure out that, we have to look at the macroeconomic trends. As you see, 10-year treasury yield is still increasing, and we saw that there was a strong correlation between this yield and the stock price. Looking at CNN Fear and Greed Index is not a bad idea, and it shows that the market is greedy now. When we look at the fear and greed over the time, we saw a peak recently and now heading to lower levels. Another important index is S&P 500 index. According to this index, we will very likely to see another rally in the second part of December. It's also called a Santa Claus rally, as you know. So it's time to make my calculation. We saw that the stock price was $32 level in 2019. Let's make 5% less earnings discount and 5% more debt discount and 3% dividend discount. It makes 13%. And let's get the stock price as $30. And when we do these discounts, we reach $26 level. And the stock price was $23 yesterday. As a conclusion, the stock was oversold. But is it the dip? Nobody knows that. When we look at the historical stock prices, when something went wrong, the stock price hit $11-12 level. So, if you are ready to buy more if the stock price drops, you should buy it. Or you can wait and see what happens. The stock price should stabilize itself after this huge drop. This is a typical value stock and the company survived more than 100 years. I think in the long term you won't lose your money. The company faced 2 world wars and a lot of financial crises and also survived during the high inflation periods. Guys, don't forget these are my opinions and please do also your own research. Thanks for watching till the end. Please give a like and don't forget to subscribe to our channel. Bye.